Welcome to Insightful Value, where we uncover value hiding in plain sight. Today, we're looking at a classic name that has been quietly building wealth for investors over generations, Continental. And yes, its stock is currently trading at a discount, but is that a red flag or an opportunity? This review is for informational and educational purposes only and is not financial advice. Be sure to like this video, subscribe to the channel, and stick around to see if Continental belongs on your radar. Continental is one of the oldest and most established closed-end funds on the market, with a history that dates back to 1929. Managed by Columbia Threadneedle Investments, this fund offers a diversified portfolio of primarily US large-cap equities. Its top holdings typically include blue-chip companies across sectors like technology, healthcare, financials, and consumer goods. Think of it as a conservative, equity-heavy basket of some of the strongest businesses in America. Unlike an exchange-traded fund, Continental trades at a market price that often differs from its net asset value, and right now that difference, or discount, is wider than its historical average. From a value perspective, that's worth noting. When a fund trades at a discount to its net asset value, it can potentially offer better than market returns if that gap narrows over time. Continental pays quarterly distributions and has maintained a consistent dividend over the years. Its yield typically ranges between 3 to 5%, which can appeal to income-focused investors. That said, part of that payout can sometimes include return of capital, so it's worth understanding the source of those distributions. From a financial standpoint, the fund's expenses are modest, with a relatively low management fee. However, it's still higher than the cost of owning a typical index ETF, which may be a downside for ultra-cost-sensitive investors. Risks? As a closed-end fund, Continental's share price can be more volatile than the actual value of its holdings. And while its performance generally follows the broader market, investors don't have control over individual stock selections. Also, the use of leverage, while not excessive, can amplify both gains and losses. So why consider this fund right now? If you're seeking exposure to a diversified large-cap portfolio, enjoy regular income, and are looking to buy into the market at a slight discount, Continental may offer an attractive entry point. On the flip side, if you prefer lower fees, daily liquidity at net asset value, or more control over your holdings, this fund may not be the perfect match. At Insightful Value, we provide in-depth analysis of companies and funds that are often overlooked by the market. We break down complex data and make it useful for both experienced investors and beginners. For more on Continental and other undervalued ideas, visit insightfulvalue.com. And of course, subscribe to our channel, like this video, and stay ahead of the curve at insightfulvalue.com.